Welcome to episode 36 of the Minds Capital podcast, the show devoted to the growing world of independent sponsorship in entrepreneurial private equity. I'm Will Smith, here with my partners in Minds Capital, Nicholas James and Max Lummis. Today's conversation is with Quinten Griffiths of GoodCapital and currently CEO of one of their platform businesses, Sportball. Max, what did you think of our conversation with Quinten?
I liked it. I thought that the investment company being GoodCapital was appropriately named. Quinten and his group tend to focus on mission-oriented businesses in addition to seeking out IRR. They've got a business called Sportball, as you mentioned, which is a youth soccer training business, which I think is super interesting. They also have a business called Raisin, which is a software that supports charities with peer-to-peer fundraising. And they've got a discovery business, which actually involves tracking decarbonization data for oil field service companies. So you can hear the mission sort of in those businesses. Obviously, it's important to generate good returns, and it sounds like they've had a good track record doing that as well. But this purpose-driven model is interesting because it allows them to attract really strong talent, and anybody that's hiring these days knows that these younger generations tend to be motivated by not only money but also by purpose. And obviously, winning in any of these businesses requires really strong talent. So I thought the purpose-driven model was something that's it's really interesting. And at the end of the day, I think it's probably more fun for all of us to work on projects where we actually believe in what we're doing and we believe that we're making a difference. Certainly we've probably all worked in places where it was really just kind of a job, but I think, anybody would be happier where you can not only make money, but do something that you feel good about. So I like that. I think that's a really sustainable approach. I also found it pretty interesting to hear about valuations in Canada. There's just not as many lower middle market deals in Canada. So there's not as many transaction comparables. And so as Quinten mentioned, there tends to be more of a bid-ask spread on a lot of these deals. And that gets bridged, I guess, by creative structuring in some cases. But, it's just more of a, I guess, imperfect market there in terms of the lower middle market. There's just fewer deals. And I think that's probably the trend in a lot of places around the world, a lot of non-US places. So that's interesting to hear that that's something that's, affecting the Canadian deal market. And the last thing that I wanted to mention was GoodCapital's holdco approach. It's really more of like a permanent hold structure. And what comes to mind when I think about permanent hold and the LPs that are interested in that are, these are typically family offices that are investing in permanent hold type businesses. And when you think about why that's attractive to an LP, you're typically dealing with somebody who's probably in the ultra high net worth category versus just sort of an accredited investor. And the ultra high net worth category, these folks don't really need the money. They need it, and they hope to grow the assets under management and get a good return, but they don't need the cash flow. Whereas an accredited investor might be counting on a deal to yield him, 3 or 4x in the future, and then he's going to plan to use that towards retirement. Maybe he's planning to use it for kids' college education. But the point is that there's definitely a difference between accredited investors and sort of ultra high net worth accredited investors. And the average accredited investor probably can't afford to just deploy money and just sort of forget about it forever. I think those of us who are in that category like to eventually see a return and have some liquidity over a 5 to 7 year time horizon.
It's a great point. You mentioned Canada. So a big feature of this, or a big theme of this interview with Quinten is what it's like to be a sponsor in Canada, where the term independent sponsor itself isn't really used nearly as much as it is down here. We talk about a lot of angles related to being a Canadian sponsor. One thing that didn't make it into the interview, but I'll just plug a vendor here, because in my experience on acquiring mines, his name comes up a lot. And with Quinten and I offline, he mentioned his attorney. And I said, that attorney doesn't have to happen to be Mario, does it? And he said, in fact, it is. So there's this attorney, Mario Nigro, I think his last name is pronounced, out of Toronto, who my experience is all roads of business buying in Canada lead through Mario. So if any Canadian sponsors who are not yet super plugged into the ecosystem there or don't have their vendors lined up, Mario is your guy on the legal side and also on the networking side, because I think he just knows everybody, including Quinten. Nicholas, your thoughts?
Yeah, we had this joke where I'm from. I'm Norwegian, as you guys know, and it rains a whole lot in my hometown. And so there's this joke, and it goes something like this. An American cruise tourist walks off the ship. He sees a little boy standing there on the quay, and he asks, "Hey, little boy, does it always rain around here?" And the little boy, I don't know how he knows English, but he says, I don't know. I'm only 6 years old. And, I sometimes feel the same way when it comes to business. There is just a never-ending, series of problems or issues that come your way. And it's often said that good business people are good problem solvers. And equilibrium or this, homeostasis doesn't exist. This is business. And in fact, if you find yourself on a plateau, a good business person will challenge themselves to take it to the next level. And when it comes to problem solving, Quinten might just be that person you want to solve problems. He is super perceptive and super creative. And throughout this episode, he gives us anecdotes and examples of how he has used creativity, thought outside the box in order to solve problems. So as an example, he goes in as a CEO. He made good money, life-changing money from the sound of it on his first deal. And there he goes into being CEO of another company later on, of Sportball right now. That's pretty creative or very hands-on, right? He says explicitly, I'm attracted to problems and issues. One of the companies he's been involved with was a distressed company. He looks upon deal sourcing not as a means to an end, getting deals, but as a way to do market intel. So they have two associates, even though he confesses to saying, on a platform level, we're probably close to max capacity. He talks about purpose-driven and how this is a key to attract talent. He talks about the indefinite hold. He says we don't really care about the size of a company, but whether or not it's different and a good fit for us. And then, of course, we run through one of the deals where it's actually 100% seller financed, and this is how he got in the game initially. So just like a common theme here is he's solving problems by being creative. And this is such a key skill for anyone in business, and why I think he has a loyal following of investors who back him over and over again in the ventures that he is working on.
Great thoughts there. I will say we had to take out some of the details of that first deal just for confidentiality reasons. So you'll hear broad strokes, listener, but some of the details on his 100% seller finance deal we had to cut. But that's what Nicholas is referring to there. Let's get to it. A reminder that Minds Capital is actively investing in independent sponsor deals. So if you are a sponsor raising for a deal that you have under LOI, please reach out to us, mindscapital.co. And if you're an accredited investor, you'll find a forum on our website where you can learn more about our current and future fundraisers. We are now about halfway subscribed to Flagship 2, which is going very well. So more information about that can be found on the other side of the forum on mindscapital.co. And with that, let's get to Quinten Griffiths of GoodCapital, episode 36 of the Minds Capital podcast. Enjoy. Welcome to the Minds Capital Podcast, your connection to the growing world of independent sponsors and entrepreneurial private equity. We are your hosts, Will Smith and Nicholas James. Quinten Griffiths is a Calgary-based sponsor via his investment firm, GoodCapital. Good has made 3 platform acquisitions, and Quinten started his business buying career as a search fund entrepreneur, which was a bit of a story and a saga unto itself, which we're going to get a little bit more detail on here in a sec. Lots of ground to cover between then and now. Quinten Griffiths, welcome to the Minds Capital Podcast.
Hey guys, thanks for having me.
Quinten, before we get into that first deal of yours, tell us a little bit more about what Good looks like today, the platforms, your partner. What is Good today?
Yeah, thanks. So GoodCapital is essentially a partnership between myself and Adrian Bartha. He's located in Toronto, also a former searcher. And we are acquiring small, medium-sized businesses that serve a purpose. So we're not necessarily the save the whale type of investors, but we're really the investors around, hey, is this business solving a real world problem? There's a lot of problems in the world that you can't be solved by individuals and government alone. So business has a role to play in this. So let's back and invest these types of businesses because we found great success for original acquisitions. And we found that was like the main reason that they were successful was because they were purpose driven. We own 3 companies today. So we own 2 headquartered in Toronto, Canada, and 1 headquartered in Calgary, Canada. We own a software company called Discovery. We own a software company called Raisin. And we own a kids sports company called Sportball. And yeah, that's where GoodCapital is today.
Great, Quinten. And when you say own, are these indefinite holds? Are these businesses that you've acquired and are growing and are likely to exit? Give us a little bit more about how you see these holdings and investments.
Yeah, I think, businesses don't operate on like a 5-year schedule, right? So when Adrian and I set out to do this, one of the things that was really important to us was having that indefinite hold period. So we've been fortunate enough to, on the first couple of deals, it was actually mostly Adrian and myself doing these deals. We're most of the cap table. And then the third deal was a little bit larger. So we brought on some LPs who we've been investing with since our search days. And we've always had the message that, hey, businesses don't operate in the 5-year calendar. So we prefer the indefinite hold route. Our perspective is let's continue, when we buy these businesses, we usually have like a mission that we've set out for ourselves, and we want to go accomplish that mission. And we don't want to be, having a gun to our head where we have a certain amount of time to deliver on that. So for us, it's indefinite hold.
Great. Okay. Well, I think that's a theme that we'll return to later in the conversation. But first, let's go back, rewind to your early days as a searcher, and then, as you put it, accidental independent sponsor.
Yeah. I was thinking maybe this. Yeah, I was thinking that's probably the most accurate term of what we've become. But just kind of setting the context a little bit, I went to school in Canada. I'm a chemical engineer by trade, spent 5 years at Shell, hard hat, coveralls, always wanted to be an entrepreneur, never really had an idea. So instead of, starting something, I figured it'd be a good idea to go buy something. So after finishing a MBA degree at INSEAD, I came back to Canada, and started the search. So raised like a traditional search fund, had all the typical LPs in there from back in the day. Because I guess this was like 2017. So I was probably the 3rd or 4th search fund in Canada. Adrian was like the 2nd search fund in Canada. So it was still really, 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 really early days. And, went out and looked for a business to buy and was unsuccessful. Spent 2 years searching. I could talk a little bit about kind of the funnel that we had, but we pounded the pavement really, really hard, wasn't able to get a deal done, returned the search capital to my investors and said goodbye.
Why do you think it was, as you reflect back on those 2 years? Can you point to a reason you were unsuccessful? Yeah. Were you doing something wrong, or was it just luck of the draw or bad luck of the draw?
Yeah. So here's what I would say. Like, my LPs at the time, absolutely amazing. They were so fantastic, so supportive, so great. They taught me so much. And actually, a lot of those LPs are in our independent sponsor deals now. So we have great relationships with them. They were awesome. But at the time, I think the search fund model was very focused on this. Hey, 1 million EBITDA, recurring revenue, business owner only needs to be in the office like twice a week. This is the type of business you should be buying. And the reason I think search fund investors were doing that is because they were getting CEOs who were 27, 28, 29 years old, super unproven, super green. So let's just get like a rock solid business. And then this will de-risk the fact that the CEO is very inexperienced. And for me, when I was in my search, man, I was attracted to like the businesses that had problems. Like I was so excited to find businesses that needed a turnaround or that needed something to be fixed. And I think there was a disconnect between myself and the LPs, honestly, and I found
so you found deals you liked, but none that you could get your LPs on board with.
Yeah. I mean, I can give you the funnel. It was like, I had over 950 intro calls over 2 years with owners. I signed 220 NDAs. I issued 42 IOIs. I issued 12 LOIs, and I signed 6, and I didn't close one deal. And in each of the 6 cases, I was the one to walk away because I found something in diligence that was not what I expected. And so it kind of left me at a point where I didn't really know what I was going to do, and it was so funny. Like when I shut down my fund and returned the capital, I literally went to the Grand Canyon like the next week because I was like, I need to figure out what I'm doing. Because all my investors were like, well, what are you going to do next? And I was like, I have no idea because I'm 100% committed until I'm not. I never have a plan B because whenever I have a plan B, then I drift to that. So I'm on plan A until plan A doesn't work out. So shut down the search fund, go to the Grand Canyon, and like just finish the South Kaibab Trail. I kid you not, I get a phone call from an owner I used to work with. He said, hey, Quinten, still thinking about that deal we were supposed to do a year and a half ago. Didn't work out. Would love to revisit. And I said, Greg, hey, unfortunately, I've shut down the fund, like returned the capital. It's done. It's over. We had our chance. It's done. And then he said, well, is there any way we can get this done? And I was like, well, unless you get this, I'm just willing to accept a very creative offer, then no. And he said, well, make me something creative. So I went back to my LPs and I said, hey, search LPs. Is this something you're interested in? It's not part of the search. It's outside of the search. Is this something you're interested in? And all of them said no, because it was a very wacky deal, what I proposed. But basically, I ended up buying he had a business unit within his company. That was a small software business that was losing a significant amount of money. And I bought that business personally for like a large VTB, basically. And
VTB?
Yeah, vendor take back note. There's another Canadianism. We call that a seller note. So I don't know what it is. VTBs are seller notes. Yeah, like I don't know why, but Canadians don't like calling people sellers. They like the term vendor a little bit more. I just seller means like you're selling, which is it's I don't know why it is, but that's just kind of the way it is. So yeah, large seller note, and ended up buying the business and ran that. And God, really, the first weekend of the job was right-sizing the business, getting the costs under control, and building a website. Like build a website in Wix. Like that was the first weekend, and then ran the business, exited the business 4 years later, and then pooled that capital into what now is GoodCapital. So Adrian and I's venture into buying other businesses.
And so you characterize yourself as an accidental independent sponsor because that first deal did not follow the traditional search fund economics. It was a wonky kind of thing that you figured out how to put together.
Yeah.
In the way that sponsors might.
I call that a negotiated agreement. Now, there was no convention there, right? It was straight up, hey, this is what I'm looking to do. This is what he was looking to do, and we found a middle ground. And today you would call that an independent sponsor, but back in 2017, that was, just a deal, I guess, and then, that's kind of continued, to tell you the truth. When we launched GoodCapital in 2020, the term independent sponsor was not around in Canada, especially. Just recently,
you've said that it still isn't widely used.
It's still not. I mean, just last week, actually yesterday, our lawyer used the term independent sponsor, and that's like one of the first times I've heard it in Canada. And that's great, but at the time it just wasn't there. So when we started GoodCapital, we were like a private equity firm, is what we call ourselves. Mm-hmm. And then they'd say, okay, well, are you? Because I guess the other term in Canada that would have been flying before was fundless sponsor. Fundless sponsor is maybe
the same thing.
Term. Yeah, fundless sponsor was maybe a term that was floating around. But basically, GoodCapital, we do our deals on a deal-by-deal basis. So, we source the opportunity. We then finance it, and separate GP LP structure for every single deal.
And Quinten, these family offices, are they Canadian? How much of the capital that independent sponsors work with in Canada generally is Canadian capital? And then in your case as well?
That's an excellent question. I think for us, we've been doing this for 15 years now. We probably have a higher proportion of Canadian capital than most. But if you're looking at, institutionals, I would say the majority is American. The majority is American capital that's coming from for sure. Like a large majority, above 80% for sure.
A little plug here. With Fund 1, we only did US investments, but with Fund 2 that we're just now launching, we're also expanding to Canada with Minds Capital.
Oh, that's exciting. That's good.
Yep. So include us on your next deal, Quinten.
Okay. Yeah, we'll do for sure. For sure.
Quinten, you and I have been friends for a long time. Before you bought your first deal, we had monthly standing calls. I learned a lot from you. Hope it was mutual to some extent. One thing you said early, when you had early success with the company, was that you found it so simple. And I remember this conversation as it was yesterday, but you just said, on one hand, I have my customer service people and they get feedback on what we need to improve. And on the other hand, I have the software product development people and they go and fix it. And then once they fixed it, the customer service people go back to the customer and this becomes like a loop.
Yeah, it became this loop. That's right. Yeah.
And just sounded so simple. Just take feedback, improve the product, sell more, and keep growing.
Yeah, that I think was, that doesn't work in every industry. This was a government software business, but that's like exactly what we did and I remember getting in the car, driving around into these municipalities because I became the CEO, and that's maybe a little bit different than our model as well. I was the CEO of the first deal that we did, and Adrian's the CEO of Raisin, and I'm the CEO of Sportball. So we're parachuting in and out of these companies. But back to the storyline here, I remember getting in the car and going to these municipalities and being like, hey, buy our software. And they would say no. And I would say, why? And they would say, because of X, Y, and Z. So I'd write all these things down. And if things got enough votes, I'd go to the product people and I'd say, hey, this is what we need to build. And then they'd build it. And then I'd go see the municipality 6 months later and I'd be like, remember you told me you weren't willing to buy it because of these reasons. Now are you interested? And they would say yes. And they would buy it. And that's kind of how it went. Now, we've since owned other businesses since then, and I can tell you it's not that simple. But in that industry, it definitely was. And, also another reflection on that is, the first deal that I did was a very, very successful deal. And I thought to myself, like, oh man, every deal is going to be like this. This is great. This is what deals are like. And one of the things I've definitely learned is just because you're inexperienced doesn't mean you're going to do a bad deal. And just because you're experienced doesn't mean you're going to do a good deal. It kind of goes both ways. And I think that was one of the biggest learnings I had from that first deal.
And Quinten, did you take this deal that everyone told you on your side was terrible?
Oh yeah,
out of desperation because you didn't know what else? Well, because you were at the end of your search fund, you'd given back all the capital, you were, distraught in the Grand Canyon, and this opportunity presents itself, and so you grab it, or do you think, in better times you probably would have said thanks, but no thanks?
It's a good question. It's a good question. It's hard for me to completely summarize like how I was feeling back then, but I do think that I took that deal under perspective. I was like, okay, I'm healthy. I have great family backing me. I have enough money to kind of get by. Like I had a blue Subaru at the time, and that was basically it. A checking account, like that was it, and I was like, if this thing doesn't work out, my ego is going to be bruised, and that's about it. You know what I mean? And so it wasn't desperation because I honestly hadn't even thought about what I was going to do next. Like when I say I had no plan B, I meant I burned the ships, like no plan B. So when this opportunity popped out in front of me, I was like, oh, this is kind of compelling. And then move forward on that basis.
You said you did successfully grow and then exit the business. Can you give us any bullet points on the end of the story?
Yeah. So basically, by the time I had made all the changes to the organization, we had about like 7 staff, 6 staff in that neighborhood, and then grew it to about 40 staff in that neighborhood with about 3 years. And it was it was all ARR growth too. So it was like really, really value accretive. Like at the time when ARR growth was starting to become hot, and ended up looking around for other businesses to buy because I had basically gotten to the point where, I'd actually been able to generate enough cash to pay off a significant amount of that seller note already. And the vendor kind of looked at me and said, hey, if there's a way for us to continue going down this ride, maybe we'll renegotiate this note because I can see the returns here and things are working out well. So started marching down the path looking for another business to buy and spoke to about 4 or 5 businesses in our space. And one of them turned out to be backed by Greater Sum Ventures and Providence Equity Group, and they ended up acquiring us. And that business is now called Catalyst. And it was essentially a roll-up of Canadian municipal software businesses, and exited that business clean. So I didn't have any involvement post-close, like 2 weeks before or a week before the NBA shut down for COVID. That's kind of what I remember. And then I went into hiding as the world melted down for 8 months, and just that's kind of how it worked out. Had a lot of success, made a ton of mistakes, but it ended up getting pretty lucky.
And can you tell us what it did for your personal balance sheet in that, that blue Subaru, given that it was the seed for good? You and Adrian now get together. You've said that. So it was a material exit for you personally.
It was a material exit for me personally. It allowed me basically to just spend the time that I want to be spending on what I want to be spending on. And I think Adrian's in the same boat, and that's what makes GoodCapital so interesting is that we're just doing this because we like it. Yes, we want to generate returns, and our performance has been strong, over that time, 30% net IRR to LPs over a lifetime realized, over 3-time MOIC realized. We don't benchmark on our unrealized stuff ever. So performance has been good, but really Adrian and I, we like doing this, and it's fun. It's what we like spending our time on. So that's why we're doing it.
At the very beginning, Quinten, you said that you guys are compelled to acquire purpose-driven companies.
Yeah.
Can you give us some examples of what is not the purpose-driven company? Because I'm pretty sure every business owner out there will see some purpose in what they're doing and selling and producing of value.
Yeah. So Adrian and I talk about this a lot. We're like, okay, is this really purpose-driven, or is it just like a marketing exercise? And I think it's really, for us, it's purposes that we believe in, that we admire. So, for example, Raisin. Raisin's a super cool company. They help charities raise money through peer-to-peer events. So if you do, in Canada, a big thing's the Ride to Conquer Cancer. So it's, hey, Will's, raising $2,000 to go on this bike ride where they're going to shut down, a major highway in Austin, Texas, or something like that. And that is, that software platform is what we supply to charities to help raise money. So that's a very obvious one. Discovery is really cool in the way that we're helping kind of these oil field service providers starting to decarbonize and appreciate some of the Scope 2, Scope 1 emissions that they generate, which we think is admirable for the Canadian economy. And then Sportball, which is, the business that I kind of fell in love with. Because I'm not going to lie, like after selling Unisite, I was like, I'm never going to be an operator again because it was just too much stress and whatever. But ended up meeting Sportball and just frankly fell in love. So Sportball, what they do is they teach kids, mostly ages 1 through 5, how to play sports. So every single year, about 65,000 kids go through Sportball. It's a franchise business, so we sell Sportball franchises, which is also very, very cool. And when I met the owners here, Mark and Carmela, who were really inspiring visionaries for this, they taught me about this concept of physical literacy. I just thought that I had the physical capabilities that I had because I was normally athletic, and they were like, no, you can actually teach these things to kids. You could teach kids how to have good hand-eye coordination, teach them how to have good balance and all these. And I was like, wow, this is so cool. So I reflected on my life and I said, wow, this is I'm physically literate. I've got more friends. I'm healthier. I met my wife. She wouldn't put up with me if I wasn't physically literate. And I went to go talk to my wife. I said, have you heard this thing called physical literacy? And she's a pediatric physiotherapist at the Children's Hospital. She kind of laughed at me. She's like, yeah, of course I heard about this. This is what I do for a living. So I honestly went to Adrian and I was like, Adrian, I got to take a break from GoodCapital. I got to go run this business because this thing is just so cool. And I've been having an absolute blast teaching kids how to fall in love with sports and how to live a healthy, active lifestyle into their future, especially, in these days. I think it's just so important to get out and be active. So yeah, that's kind of how all those three businesses speak to purpose. Once again, it's kind of in the eye of the beholder, but I think it's one of those things where Adrian and I need to be able to like sleep well at night in talking to talent, because at the end of the day, we think purpose-driven businesses unfairly attract great talent. Like, because a company is just made up of individuals at the end of the day. So if we get the best people, we're going to win in the end. That's really how we feel about it. And so that's why we seek out purpose-driven businesses, is for that exact reason. Is because when we talk to prospective candidates who are considering jobs at like, Salesforce.com or Raisin, we can convince them to come to Raisin because what we're doing is like super, super compelling, right? And that is, I think, our only check mark is like, can we honestly stand in front of talent and tell them about this mission without sounding like salespeople? And I think in all three of those businesses, we most definitely can.
That's great, Quinten. And you're actually not the first person I've heard say that when there is kind of, I don't want to overstate it, but the double bottom line kind of concept.
Sure. Yeah.
That it can be a magnet for talent because you're optimizing then for mission, which can be more powerful than money. Quinten, sport ball, what an interesting concept. Two follow-up questions to that. First of all, give us a picture of how big the business is. How many franchisees? I imagine running a franchisor in Canada, forgive my chauvinism here, but I imagine a big play there is always to bring it into the American market. Maybe not, but just give us a picture of the franchisees and how you put more dots on the map, how you grow those territories.
Yeah, sure. Thanks. So at Sportball, we operate in 4 countries. We operate in Canada, the U.S., Singapore, and India. And we have about 35, I think 35, maybe 40 franchisees, franchise partners. And basically, this business was founded 31 years ago in Toronto, Ontario, Canada. And it was founded by Mark and Carmela, just like running this thing out of the car. And it's grown to what it is today. The U.S., we have about 10 territories in the U.S. and in Canada, we're pretty well penetrated. There's basically only one major market in Canada that we haven't sold into. So yes, the U.S. is definitely a place that we're looking to grow. Youth enrichment is probably the category that we would fall into, and is one that I think is kind of hot in the franchising space right now, and is one that is getting a lot of attention because at the end of the day, there are a lot of people out there who just have a passion for working with kids, and they're trying to find a way to do that while satisfying their entrepreneurial, endeavors. And that is, essentially the type of person that we're looking for. The profile of our franchisees, is fascinating. We have somebody, I think about Coach Ryan in Lethbridge, Alberta, Canada, which is a small town in Canada, about 70,000 people. That guy can't go to a grocery store without being recognized because that, like, he's just part of the fabric of that community, right? Or we have, somebody like Matt Pierce, who is, owns 5 or 6 different territories and is kind of building himself like an empire. So we have many different types of franchisees. It's kind of like the old Choose Your Own Adventure Goosebumps books, right? Where you kind of pick the pages you want to go to, and those are the people that we enjoy working with.
And now growth comes from the American market, and I say that instead of Singapore and India because it's right here, and it's where, obviously the proximity and the cultural similarities. How many franchisees, how many territories do you have down here? And is that the main lever you're trying to pull?
Yeah, I think we have. I have to check our franchise disclosure document, but I think it's probably 6 to 10 territories that we have in the U.S. Our system sales in Canada are strong, so it's not necessarily like our system sales growth in Canada is strong, so it's not the main lever that we need to pull. However, it is the obvious one heading down into the U.S. So and we make no illusions that Americans and Canadians are not the same, and so for us. We have some franchise partners in the U.S. who we're relying on to help educate us on the market, and I think that's been really beneficial. We've got a lot of interest happening in Texas right now, as well as New York State. So those are kind of the 2 areas that we're really focused on, and looking to meet exciting franchise partners that can help our business grow.
Quinten, thank you for that. I also wanted to ask on the sport ball point, how you and Adrian think about stepping in as CEOs or not. So the super conventional independent sponsor model is sponsor buys platform, works with management, and isn't the CEO themselves. Obviously, there are exceptions, and the amount of involvement is kind of a spectrum. But in your case with Adrian, it sounds like sometimes you guys, one of you will jump into, in your case, a business that just really interests you. You fell in love with it, as you put it, and so it sounded like you were kind of putting your official good capital duties on pause while you do this. So flesh that out more. And is this the luxury of basically owning most of your businesses and not having LPs breathing down your neck?
Yeah, so we do it on a deal by deal basis. The first deal we did, we hired a CEO because Adrian and I did not think that we were the right person for that opportunity. The business owner was retiring. We needed a CEO. So the second, sport ball, I straight up fell in love. Like, I'm a software guy. I'm an engineer. I got no business running a sports franchising business, but I just literally fell in love, and I was just like, I want to figure this out. And then Raisin, it was very clear that Adrian's skill set could help Raisin. It was exceptionally clear, and it would have been a disservice to the company if we didn't put Adrian in there. So that was kind of how the three went. Now we have a fourth deal that is closing on Halloween. Not closed yet, but closing on Halloween. We're actually in the interim period right now. The SBA is signed. There's a couple conditions that we have to release. And that one, we are keeping the CEO on board because they're a exceptionally talented individual, and they are the right person for the business. So we kind of let the business tell us what we should do. And we honestly, we have, if it so happens that this thing closes on the 31st, which it should, we're kind of full up. 4 deals is kind of enough for us, and that's what we're going to focus on. And I don't think we're going to be in the market looking at things, but the bar is going to be really, really high for us to get involved in anything else.
And so have you been doing active deal sourcing if you look back at the 1 or 2 last years when you've also been running sports ball, or how does that work when you're this mature of an independent sponsor and this hands-on operationally?
Adrian and I always ask the question, like, how do we know that this is a good deal, the deal that we're about to do? Like, how do we know? How do we know this is a good deal, right? And I think the way that we usually know that it's a good deal is by having a good read of, the market. So having alternatives, right? Because if you don't have alternatives, if you just have one deal in front of you and you've signed an LOI with this thing and you haven't been looking at anything else, you kind of lose pulse about, what good looks like. So for us, we've always been looking at things. We have a team at GoodCapital, a couple of associates, as well as an office manager who helps support us, in that capacity. And we're always kind of looking at things. I wouldn't say it's our top priority, but we are looking at things as they're coming through because we want to continue to keep pulse on that market and never lose it, because I think that's kind of what our LPs are paying us to do. At a certain point, they're paying us to have an understanding of finding the opportunities in this segment, and for us not to keep a pulse on it, I think is probably not a great idea.
Oh, this is interesting, actually. So you're saying deal sourcing is not only for sourcing deals, but it's also actually to have a continuous market intelligence and research ability as far as engaging in businesses and so forth. And so you say you're full with 4 deals, but it sounds like you're going to keep up the deal sourcing even if you can't actively hop on them in the near-term future. Is that how I understand it?
We're going to continue to look at deals within our market, and we will actively, we came very close to pursuing an add-on acquisition for one of our businesses within the last couple of months. It didn't work out. But these are the types of opportunities that we're looking at just to gain a sense of the market and help us understand the conviction, because the types of companies that we buy, there just are not that many comparables for, it's not like you can look up an EBITDA multiple and slap it on the business and say, this is the deal, because not only the EBITDA multiples are different, but the structure is so different. And price and structure needs to be discussed in the same conversation, because a lot of the deals that we have, you could look at the multiples and say, well, that's multiples crazy. But then when you look at the structure, you're like, oh, that's actually a very, very reasonable structure for that multiple, right? Like these are two opposing forces, right? And so for us, especially in Canada, we just don't have that many deals that are being done in this lower mid-market space, and we don't have these types of comparables. So we try to get an understanding of the market by just being in it.
Do you think that lack of data to lean on gives you as buyer more or less more advantage, or is it more of an advantage to the seller?
I don't know if it does provide an advantage or disadvantage to the seller. I think it probably provides an advantage, disadvantage to actually getting deals done. because if there's good transparency on what the fair price should be, then two parties will come to agreement, more frequently. I think the lack of data prevents deals from getting done because it creates a bid-ask spread. But I don't know if it necessarily puts an advantage or a disadvantage into anyone's court.
Yeah.
Hearing about your first deal in particular, where we went a little deeper, I often complain that the independent sponsor and search approach is it's becoming a recipe, quite formulaic. This is what a deal should look like: valuation, deal structure, engagement, partnership, compensation plans. But listening to your first deal, of course, it's hugely creative. And how important is it to be savvy enough to be creative? And how has this helped you now buy soon 5 businesses when you deal with business owners to try to tailor and create a bespoke solution?
I think the creativity is born out of necessity due to the level of competition, right? I mean, it's if you have more competition for deals, you have to, because I do think, back in 2017, I used to call up a business owner and say, hey, my name's Quinten, I'm looking to buy a business. And I would get through to business owners and they'd be like, how old are you? You're 28? Man, I wish I was doing this when I was 28. This is the coolest thing ever. I've never heard of this before. This is the coolest thing. And I had so many introductory calls and so many meetings. And now it's like they've heard the story a million times, because in Canada, let's say a search fund over its lifetime contacts 1,000 businesses, right? With over a 2-year period. Not an unreasonable number, right? And you have like probably 20 search funds in Canada. So that's like 20,000 companies. We don't have 20,000 companies that fit the attributes of the search model, right? So this creativity is born out of necessity, is born out of competition. So for us, if you look at all of our deals, not one of them is like, hey, we're putting, 80% cash down, 20%, seller note or whatever, whatever some market structure is. Not one of them fits those molds. Every single one is different. And I think the reason is because we want to make the deal match the opportunity. It's a really great example, that first deal I talked about, because applying a conventional deal to that just wouldn't make any sense. Right? Like you wouldn't be able to get that deal done because the business was so unconventional.
One of the things that you said in the pre-call as well, Quinten, was about looking for 5 or 6 ways to grow a business. So other than multiples and the visibility or lack thereof in comps in the Canadian deal-making market, this is also something you look for, just kind of the intrinsic to the business, what levers exist. Talk us through that.
Yeah, I think it's, in the businesses that we've acquired, a lot of the times it's like our first entry into that market. We might have an expertise in software and we're entering a different end market. So for us to come in with this, vision and like just kind of, ram a growth strategy into this business and say, this is how we're going to grow no matter what, we think is a little bit foolish. The way that we approach it is we say, okay, we've got this toolbox of things that we've learned from the past deals, things that have worked, things that haven't worked. Let's let the business show us which tools are going to work rather than forcing a tool on it. So we usually say, we want 5 or 6 different ways to grow. And given our time frame for growing the business, we don't know which one of these is going to work, but we're going to let the business show us which one will work. And often what we'll do is when we buy the business, we'll usually do nothing for the first 100 days and just learn and soak and not make any changes that we don't have to make. And then after that, so we don't usually come in with like a first 100-day plan. That's something we don't do. We usually let the first 100 days give us the plan by just listening and soaking and learning. And then we say, okay, these were the 5 horses that we had in the race when we bought the business. 2 of those horses they're not going to work, right? But we've discovered a new one, and the first three, the other three that we had are still good. So let's invest in those and let's test those and see what will work. And that's usually our approach. It becomes a little bit more organic in that sense.
What are some of the big ones that you see now that you've done many? What's the pattern? What are these horses?
Pricing and packaging is a big one. Increasing offerings to a certain customer, taking the same offering, bringing it to new customers. Leadership, team, and culture. One of the things actually that's interesting, like I don't think I mentioned this, but when you look at the deals that we've done deals that are like 5 million enterprise value up to like 50 million enterprise value. When you look at the deals that we've done, the only real commonality between them is them working on like leveling up their leadership team, and growing that structure. And that is, I think, one of the big commonalities that we look for, and one that Adrian and I think we can help out with a lot. So it's like decentralizing the decision-making. And this isn't true for all the investments that we've made, but for most of them, it is the decentralizing the decision-making from the CEO and empowering leaders across the organization, empowering folks to really just achieve their maximum potential is one that Adrian and I are pretty good at, and one that we like spending time on. So that's probably one of the biggest levers that's not necessarily like, on a consultant slide deck out there, but is one that we think is very transformative for a company of this size and nature in Canada. And all of our deals have been in Canada. I should have mentioned that too, because that maybe haven't been mentioned yet.
You have considered doing a blind pool traditional private equity fund, and decided against it. Walk us through that decision-making process. It seems like many sponsors that we speak to are either at a point where they can consider the same thing, or are working toward that, or have already decided they never want to do that. But it's always there as a potential option on this path.
Yeah, I think so. We were approached with an opportunity to manage, $100 million fund, blind pool capital at some point to deploy in this kind of this lower mid-market in Canada. And we decided against it at the time, mostly I think because Adrian and I we had earned the right to fully control our future, kind of looked at that as like a job rather than being entrepreneurs, because Adrian and I are truly entrepreneurs. We are not.
How do you define that?
Whew. How do I define entrepreneurship?
I'm just wondering.
Yeah. I define that as you have to create a job for yourself because the job that you want to do is not out there.
Okay.
That's and like how you define job and that's a great question, but like the world that we wanted to create for ourselves and for our families wasn't really there. So we viewed it as a way, entrepreneurship was a way for us to create that. And that is the reason that we embarked on this challenge together. And that is the reason why we're still going down this path. No disrespect to that opportunity, because we're extremely grateful for it and extremely humbled to be considered for that opportunity. But also we knew we couldn't accept it because we would have been doing a disservice to the folks who were offering it, right? We had to have the utmost conviction that that was the right path for us. And in our mind, we didn't feel like we had the autonomy that Adrian and I have kind of fought so hard for, and wanted to maintain.
And so this offer was a capital provider who was going to, maybe not all 100 million of it, but a significant, maybe the anchor.
All
100 million. Wow.
Yeah, all 100 million.
And you were going to deploy on their behalf.
Yep.
Wow.
Yep. That was basically it. And we just said, no, that wasn't what we were interested in. Adrian and I have never been interested in, these deals that we've done, once again, really small, big deals. It's not because we're chasing big deals or because we're chasing small deals. We're just chasing deals that we are finding interested in. And then whatever the size is the size, we prefer, we move forward on that basis.
Well, one of the things that comes up, of course, all the time is the flexibility of the independent sponsor model. And one of the things that sponsors cite is so valuing about the model. And I feel like you are a picture of that, an extreme version of that.
Yeah, probably extreme. Probably extreme. Not necessarily. I don't know if this is the path that I would recommend following, because I've been cutting a lot of trail, if you know what I mean. But
I don't. What do you mean? Doing things like you're not following?
That's a hiking. That's like a hiking term to say like I'm cutting trail for the first time. I'm knocking down trees.
Uncharted territory.
Uncharted territory.
Yeah.
And with it comes a lot of bumps and bruises because you're cutting trail.
In forming relationships, Quinten, you had mentioned that there are layers of trust. I'm curious how you think about the word trust and how you think about forming that with stakeholders. And you mentioned Greg, your first business owner who was at your wedding. I think you co-teach with him, if I remember correctly.
Yeah.
So just curious how you approach this and what you meant by layers of trust.
So I think the layers of trust pertains to us raising money from LPs, not interacting with vendors. So I just wanted to get that straight before I answer it, because it's not actually interacting with vendors. It's actually raising money from LPs. So is that the direction you wanted to go in there, Nicholas?
Yeah, that's totally fine. How do you form trust with LPs?
Yeah, I think for us, it's about establishing relationships over time and establishing kind of what we would call this layer of, these layers of trust. We think it's a little unfair for us to knock on someone's door and ask for millions of dollars when we've never really worked with them before. So, given the fact that we've been in this line of business for about 15 years now, we've had the privilege of getting to know LPs, on a personal level, whether or not they're starting with a coffee or a phone call or whatever it may be, and then kind of working their way up to smaller commitments, up to bigger ones. And I think over time, what they learn by making smaller commitments first is saying, hey, look, they're not going to defraud us because these guys, have returned capital to us, and they give me my quarterly report, and they give me my, my tax forms, and everything is good on that front. Hey, I'm watching and I'm being educated on how they're making decisions as this business evolves, and so I can see that they're like actively thinking, and I'm starting to understand their values and their principles as sponsors, and then the results is the thing that comes last, right? I mean, that's the thing that comes last, So providing the results is also the piece that generates trust. So for us, it's it's all those things, and yeah, we have the privilege of working with some LPs that have been with us for over 10 years, and that's been just so humbling and honoring that they're willing to spend not only their time but their capital with us. And we look at that as a great duty to return not only the capital but also like doing it in the right way. And that's something that we've stayed true to.
Well, Quinten, I saved the worst for last here. As an American, I got to ask. I'm so curious. Given the headlines, and here we actually. This very Friday afternoon, there's a headline about our dear president doing something related to tariffs and just the tension with Canada at the political level, at the trade level. Is that something that is affecting your business?
Yeah. So for us, at the business level, we've had varying degrees of impact. I would say most of it has been indirect. There hasn't been any direct impact from tariffs. It's not like any of our products or services are being tariffed directly. However, there is an indirect impact in just the general customer segment, sentiment within this country. I have been surprised at the resiliency of American LPs investing into Canada. They have not really adjusted for any of this. They feel as though it seems that they feel as though, I mean, maybe the investments that we're presenting to them are relatively tariff proof and conflict proof between the countries, and maybe they're, deselecting other investments, but they haven't mentioned any of the direct impact. Maybe there's this indirect impact, which could be, a more macroeconomic piece, but we haven't really noticed anything necessarily. And coming from like a Canadian perspective, I think I'm approaching, what's going on between Canada and the US, with empathy. I think what's going on in the US is a product of a lot of discussion and a lot of changes that are happening in the country. And I think that they're trying to do right by themselves. And as Canadians, we look at a partner down south who we really, really like. And these changes have had adverse impact on us, and it's been super surprising to us. So a lot of Canadians have reacted in like a very, very visceral way. But at the end of the day, I think what hasn't changed is like, we want the best for Americans in the long term, and whatever it takes for them to sort out what they need to sort out to make their country better, we're willing to listen and stand by, and figure out how this partnership can last for an additional, however many years it's been around, centuries, right? So I think, from my perspective, that's kind of how we look at it. It doesn't change our appetite for investing in Canada. It doesn't change our appetite for investing in the U.S. It just definitely presents some like potholes that we need to like watch out for. And we think the potholes are a little unnecessary, but that's not our decision. What's going on in the U.S. is entirely up to the U.S. and for us to impart our decisions on them is foolish, right? So we really respect what's going on in the U.S. and we hope to be on the other side of this in good shape. So yeah.
Well, Quinten, that was very generous of you and empathetic, as you said, diplomatic too. So I really appreciate it. Thank you for indulging the question. It sounds like really it comes down to, capital providers obviously looking at the tariff question. So analyzing every business through that lens, and then maybe secondarily analyzing things through the sentiment of the Canadian consumer.
Yes.
And how they might change their buying habits. And
Also
the American consumer.
Because I don't think that the impacts of these changes stop at the Canadian border. Like, I think we're seeing it if we could get U.S. economic data, because the government shut down right now, like we would start to see some of these patterns like happening in the U.S. So look, maybe we're wrong, and maybe the sky is not falling, but we do believe that there is going to be an adverse effect from these changes, and hopefully like the dust will settle and we can shake hands. And who knows, maybe we just need to, fight it out. Like when the Dodgers, are playing the Blue Jays starting tonight. So who knows, maybe there will be a little bit I think there's going to be a little bit of sparks flying during that series. So pay attention to the opening ceremony of that game, because who knows, there might be some sparks that fly here. Just saying.
Oh, wow. I feel like you know something we don't.
I mean, look, I live in Calgary, far away from this game, so I have no influence on what's going on. But I think you might see a little bit of the Canadian sentiment shown there. Yeah, for sure. Quinten, where can people? We'll link your LinkedIn, but where else can people find you? Where would you direct them? Start with the GoodCapital URL, please. Yeah, GoodCapitalCo.com. People can email me, which is Quinten@GoodCapitalCo.com. My LinkedIn, which is, I think, my handle, I think, is Quinten Griffiths, I'm pretty sure. Okay. So yeah, people can reach out to me there. But yeah, thanks for having me, guys. Great discussion. Really admire what you guys are doing. And yeah, if I can help, along the journey, please feel to reach out anytime.
A lot of fun, Quinten. Thank you for coming on. Really appreciate it.
Awesome.
Hope you enjoyed that interview. For more like it, subscribe to the Minds Capital podcast wherever you listen to podcasts. You can also watch us on YouTube. Also, check out Minds Capital, where Nicholas and I are partners alongside Max Lummis. We invest equity in independent sponsor deals. So if you're a sponsor with a deal under LOI, please visit mindscapital.co to start a conversation. There's also an investor tab on our website with information about future fundraises. See you in the next episode.